Hey everyone, hopefully having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, and see what people are sharing. If you want to follow me at @Finance, and if you want to join our community, findinghappyvalue.com, where I dive deeper into all of these topics, looking for potential investment opportunities. We talk about portfolios, strategies, the three pillars, which is ratios, market conditions, and technical analysis. We also dive into individual companies. Sometimes I dive into presentations and show you guys how I evaluate companies after I find the technicals looking quite favorable. So we got Tavi here. We're going to start with that. He says, I would argue this is the most important technical chart right now. The dollar index is currently at a critical juncture, retesting two major resistance levels simultaneously. Compelling macroeconomic factors suggest this index is nearing a historic peak. As the Fed faces the dilemma of needing to reduce interest rates faster than other central banks to address the rising debt servicing burden, even amid persistent inflation. So we're at a juncture of an uptrend line and a downtrend line, which is going to act as resistance right where we're at. Now, are we going to roll? If you look at regular technical analysis, what you get is a breakdown, then you get a retest, and this is the retest of the breakout. Then we roll over. Another thing that this could potentially roll over for is that interest rates go down, and that brings the dollar with it. And that also usually coincides with a peak in the S&P 500 or the NASDAQ or both. And that kind of looks like that is possible. We're also seeing the VIX spike, which I have a chart later on here that I show you the VIX starting to spike. So all of this is interconnected. It's not that the dollar index is just going to randomly fall. It falls because it's connected to other things. It falls because of interest rates, and interest rates fall because we're seeing weakness potentially in the stock markets. Now, could this all not work out and go higher? Could the S&P and all this stuff go higher and interest rates go up and the dollar go up? It's possible, and that's what we're looking at. We're looking to see if we're going to get a turning point here. Because in technical analysis, you usually see a breakdown, a retest, and then you look for the rollover. That's what you look for. And that's what we're looking for. David says, don't shoot the messenger, but hard to argue there is not a regime change underway. And this is gold versus semiconductors. SOXX. SOXX has been just ripping historically, even in the mid 2000s. SOXX was ripping. Gold was ripping during the mid 2000s. I said that backwards. I'm sorry. Gold was outperforming during the mid 2000s. That changed during the end of the bull market of precious metals in 2011. Then we swapped into semis outperforming. And we've bottomed here in 2024, and we've broken out where gold is starting to outperform semiconductors on the downtrend line. We are at the beginning of the beginning of the beginning of the beginning move. Not just in gold, but in commodities. Commodities did the same thing. And this is also interconnected with the dollar dropping. The dollar is about to drop. This here is interconnected with this. Because the market condition when the dollar drops, the last time the dollar dropped was 02, 01, and that's this big move up in, here it is. This is the dollar, okay, it doesn't have the dollar index back that far. But that's when the dollar was dropping here. So we got the same conditions all coming up where gold's going to outperform the semiconductors. And this is also the big commodity bull market. This is the third wave here, guys. We're gonna get out of these basing patterns. And yes, at the beginning of these moves, sometimes it's sticky and ugly with lots of volatility. I'll just state that there. It depends how fast the S&P 500 falls and the NASDAQ, and if there's margin calls with it. That it could leak into the stuff that we own for a little bit of time. Jesse says, many people panic during pullbacks. Anyone who is panicking really needs to evaluate whether they can handle volatile assets. Just wanting to make money is not enough. You need to have patience, vision, tenacity, and a strong stomach. It says, since August, there have been sharp pullbacks along the way, yet silver continues higher after that. There is no reason to believe that this one is any different. We had a little sharp pullback in silver. I'm kind of immune to these things, guys. Like, I almost get excited for these pullbacks. I used to get worried about them in the beginning. Now it's like, bring it on. I don't care. My portfolio goes way up and way down with some of the silver junior companies I have. But I look for buying opportunities, and I'm not buying necessarily silver, but I look for things that are out of favor. And these big pullbacks, that's when I load up. And that's where you got to like flip the switch in your brain, where you don't really get excited. You're just indifferent. And then you get excited when things pull back because that's where your buy points are at. That's the value that you can get from the website too, because you can see when I'm positioning. And then you can say, oh my God, this guy's buying stuff when they're down, or he's buying a breakout, do it on the retest, or he's buying things that are in a dead period that's coming out of a base or something. And then you once you see a bunch of entry points, you're like, oh, that's how it works. And then these pullbacks up here, they're not that bad because you bought it at a bottom when it was, squeezing up. So you bought it at $22 or something, and you're up here at 34, and you're like, who cares? It's down to 32.50 or whatever. It just doesn't matter anymore. Your buy points is a function of safety. Like, you make all of this money off your buy point. So if you become a really good buyer, it makes things a little bit easier. It's not totally easy. I hear a lot of people, oh, well, you're up, 5x or 10x on something, and you get a 50% pullback. That's not a big deal. It's like, yeah, it is. Tell me the last time that you had a 6 or 7 figure drawdown. Most people have never experienced that. So you're going to have your emotions have to grow with the money as that compounds too. NASDAQ putting in big bearish engulfing candlestick today. SPX getting some selling pressure too. That's from myself. There's the big bearish engulfing where we could potentially head lower. And that doesn't look all that pretty. And that's on a weekly candlestick basis here. This one's the S&P 500. That looks a little bit roll-over-ish. We still have support underneath us on the S&P, so we'll see what happens. Another thing that doesn't look all that great is that the VIX is shooting higher today and breaking the downtrend. There is the VIX shooting on up, breaking the downtrend line here, where this often coincides, these big VIX spikes coincide with lower S&P 500. And NASDAQ could also fall in that too. And this is just a bigger picture. You can see that we broke out of this big downtrend line here, broke out, retest, and we could be in for a big move lower in the S&P 500. And the rising wedge up here coincides with my exact thoughts of this potentially being a top. Coming down, we've got Joe. It says, commodity companies investing been hard. Would have been so much better off and less stress in the NASDAQ index and the S&P 500 index over the past 4.5 years and past 2 years. Of course, the 2022 year, best in cash, utilities, pharma, defense, that's it. Well, there was a lot of companies that I made a ton of money on in 2022. Some of them went over 100% in oil, depending on which ones you're in. So I think it really depends on what you're investing in. And if I were to, I'm not going to pull up my account here, but my account's been pretty steadily going up since 2020 onward. And I would consider the bottom of the commodities market to be 2020. I would also not go into the S&P 500 or NASDAQ because it's overvalued. And you always want a margin of safety with the value aspect. So I think the value, you can maybe find a few companies that have good value in the S&P 500 and NASDAQ, maybe. But I think there's way better value in commodities. So looking at risk reward, looking at the potential upside asymmetry, commodities are a spot to be. And it doesn't matter if it takes a couple of years for all this to play out. There's a lot of companies in 2022 that had outperformed a lot of the S&P 500 companies in oil and energy service. So there's a lot of good companies in commodities that have done well since the past 4.5 years. Some are up 20, 30, 40x. And I have a feeling that over the next, 5, 10 years, that they could do something like an 8 or 10x on top of that. So we've got a long way to go. Christine says, this is a lot of growth given $75 a barrel WTI. Can we trust the numbers? U.S. August crude production was at 13.4 million barrels per day versus 13.2 million barrels per day in July. It was revised from 13.205. Can we trust the numbers? I don't know what to trust anymore, guys. The numbers that the Federal Reserve gives out, the Freds and stuff, I don't know if I agree with some of those numbers, like unemployment numbers and employment numbers. I don't know. And some of the inflation numbers, I don't buy it. So who knows? Who knows? Another one from Jesse. He says, I don't believe that it's always manipulation when silver goes down. I believe those types of slams are manipulation because of how sharply it goes down. It almost always occurs from 8:30 to 11 a.m. Eastern Standard Time, and how frequently it happens. It says another morning, another silver slam. This has occurred in 5 out of the last 8 trading sessions. The banking cartel is doing everything they can to stop silver from finally thriving. I still believe silver will prevail, though. And these are the morning silver slams. In his opinion, that is market manipulation. Every single time, it's these big selling pressure moves. Now, here's the thing that makes me think that it's also manipulation. See how we're going sideways? Usually when you get this type of selling pressure, if it's organic, you would start to see this fall. And you'd see a big selling pressure move follow through. And maybe that does finally come. But it does look a little bit weird. And the timing is impeccable on these things. It's like 8:30 a.m.-ish to 9 a.m. They hit it. They also hit other asset classes like oil at the same time. Go look at oil and 8:30 to 9 a.m. That's when they start these big selling pressure waterfall moves. Very, very weird how all of that lines up together. Peter Schiff, I'm gonna read this one. I think it's funny. He says Michael Saylor is the Eggman. His latest announcement is that MSTR will spend another $42 billion to buy Bitcoin, funded by issuing $21 billion in debt and $21 billion in equity over the next 3 years. This reminds me of a joke I heard a long time ago. So here's the joke, guys. A client calls his broker inquiring about egg futures and is quoted a price of 25 cents per contract. Having a hunch about the egg market, he buys 100 contracts. A week later, he calls his broker to get a quote, pleased to learn that the price per contract has risen 35 cents to 35 cents. He decides to buy another 1,000 contracts. A few days later, eager to check on the progress of his investments, he is amazed to learn that the price has now risen to 50 cents per contract, twice the price he paid for his original 100 contracts. Sensing a trend, he steps it up, this time buying 100,000 contracts. The next day, ecstatic to learn that the price per contract has now risen to 65 cents, he gets even more aggressive, buying 1,000,000 contracts. Sure enough, the following day, the price per contract rises to 95 cents. prompting him to order an additional million contracts. The day after that, rising prices further validate his intuition. He buys yet another million contracts, this time paying $1.25. The next day, the egg contracts trading at $1.75. He senses that the market has risen too far too fast and places an order to sell 2 million contracts. After a pregnant pause, his broker replies, "Sell to whom? You're the Eggman." He's the one that purchased it and drove the price up to that level. And there's no one to sell to, much like Michael Saylor is doing with Bitcoin. Jesse Colombo, he says the banking, oh yeah, I already went over that. If this massive 10-year top in consumer discretionary relative to the S&P gets completed and resolves lower, the bull market is canceled, period. So that's XLY divided by the S&P 500 and the potential breakdown. And XLY top holdings are Amazon, Tesla, and Home Depot. HFI, total oil inventories. Total inventories grew by 11.9 million barrels. Look where we're at. Yeah, we're totally flush with oil inventory at the low end of inventory levels, scraping along the bottom here. Rick Rule says the one or two next quarterly earnings report are so critical. If we see a follow-through in free cash flow as a consequence of higher gold prices, I think you'll see a renewed vigor among the senior miners, both from the traditional gold community and the generalist investor. And you know what? I'm going to add to this. Not only are people going to get more ecstatic about gold, if we get a rollover in the S&P and the NASDAQ like we saw up here in those charts, that's also going to reignite interest in things that are going up. So yes, I think we could see a bunch. Here's the great Marty. He's been pretty bearish. NASDAQ 13K first target by early 2025. Fear will come quick, soon, and out of nowhere. That is his opinion there, and we could see a big pullback in the NASDAQ. And you know what? I hate to say it, but I kind of agree. That chart looks like a Batman pattern. It really does. Willem says it's official. There are not enough buyers in the open market for treasuries to cover the huge deficits, apparently. So the Treasury is starting another round of Weimarization by printing and buying them. That explains why the dollar is down. And this is the U.S. Treasury. We expect to buy up to $30 billion in off-the-run securities for liquidity support. Here it comes, QE, quantitative easing. Got to support those bonds. Mining visuals, copper demand, 2021 to 2050 forecast, way higher. And that is for construction, consumer other, power infrastructure, going way up. Going down a little bit, actually. Transport and capital goods. The big portion is, let me see here, for demand. Oh, yeah. Big transport is the big one, 223%. 223% for transport. And here you have it, China steel industry PMI index at 54.6 following a 49 number in September, the highest in 7 years and first print above 50 since 2020. So it looks like it's turning around for the steel industry. I've been saying for a year or two that home builders love high mortgage rates, in his opinion. The high mortgage rates eliminated existing home competition. Imagine being able to get rid of your largest competitor in a snap. When rates come down, they're going to lose a huge advantage, in his opinion. So home builders usually love cheap mortgages, maybe not this time. Sales of newly built homes have been on a tear. Soon, builders will face stiffer competition for buyers if those rates come back down. So that's their opinion there. Here's the other one. U.S. Treasury. We anticipate buying up to $22.5 billion in 1 month to 2 year securities for cash management purposes. More money printing. That was 22.5, and the other one was 30 billion in off the run securities. So we're printing money left and right, front and center. Breaking news. Institutional traders just sold the most amount of stocks last week in more than 9 years. In every bubble like 1929, 1987, 2001, and 2008, the last stages were when institutions started dumping on the bag holding retail, which buy it up. This bubble will pop. And that is the beginning stages of that turn. And that is also what I'm seeing in the charts. The beginning stages of the turn. We've got Silver Roadmap from Grady. He says the chart first posted back in 2019. It's still showing the way. Said silver was getting ready, and then it broke out above the blue line. Bull market price objective is still $370 an ounce, but could briefly go double that in a parabolic move at the end of the bull market. Possible time span for the fifth K wave top, 2029 to 2040. Somewhere in that range, depending on if it's right translated or not. But that's what we've got for silver. Everything's looking really good from the long, big picture view. Here's Tavi. It says, we are likely at the very peak of the CapEx cycle once again, in my view. Telecom bubble, housing bubble, shale revolution, and AI frenzy back at that upper trend line. Ready to potentially roll over. Bubble, 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 bubble. The biggest quagmire of this market, you have two choices. Sit in cash and watch your wealth get destroyed by currency debasement. Take on tremendous risk and buy overpriced equities and attempt to keep up with inflation. What's an investor supposed to do? That's where your gold comes into play, boys. Gold, silver, platinum, and palladium. We also have commodities because they're cheap and they go up during inflation. That is what an investor is supposed to do, is gain more exposure to that area. But that's what we've got for today. That's all we've got. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We still have that May Day coupon code that is active. We've got a question and answer session coming up at 5 p.m. Sunday. If you'd like to join it, it's at Mountain Time. Well, do we have a fall? I think that's coming soon. We do have a time change, I think, coming up this weekend. We'll see if that's impacted. But that's what I've got for today. So we'll catch you next time. This is Finding Value.